Can I make a funny observation? Not that long ago, the crypto market was products that didn't generate any revenue with highly valued utility coins attached to them. And now we're going into a potential future where actually you have products that are generating a lot of revenue with very low valued, not utility coins, but like coins that somehow are linked to the success. It just, that's kind of like it's quite a positive framing for what has happened, where like it's not all fake anymore, essentially. But then this coincides with people stopping caring, which is kind of like an interesting dynamic, right? It's like we made it and there's just no one here. Like nobody cares. And we're back for the biggest episode of the year. What we just termed as the cuddly bear market episode.
I was just thinking earlier today, actually, how funny it was since we just ended up talking about AI and robotics and whatnot the last time. And it actually took me a bit to edit it, and we put it out just after the structure broke on the weekly and the market went to shit. So it kind of feels like we pivoted from crypto to AI just as the market went to hell.
Yeah, there's a good timing there. It's like the classic move, right? The crypto guys as the market goes to shit. Okay, robotics actually.
Well, no, we did quite a bit on AI and AGI and whatnot on that one as well.
I would say those are still better than pivoting to mattresses, which some people have. I don't know. Get the reference. Palm started selling mattresses in the last bear.
Oh, Palm mattress. Yeah. Well, I mean, give it time, man. We've been like in bear market for a week and a few days, so it's still time.
Well, yeah. So let's start with that. Do we think it's a bear market, and and why? Because I think no one is quite clear on whether we're in the bear market. It's a bit unclear whether we were in a bull market. Like, let's just give one at a time your view on what is the market right now, like where we're headed.
Ricardo, pick who's first. Okay, so it's me then. That's how we pick. I don't know, man. Bit early to call it, frankly. I mean, this is the second week. Like, structure on the weekly for me broke the previous week. Right. This is the second week. We haven't really gone that far down, so it's not looking terrible. It's not looking pretty either, because we pretty much have nothing but thin air until like the mid-70s. So this is kind of like right now, no man's land. Who knows what the hell may happen? You could breathe on the chart the wrong way and it's going to go to shit, or we may get some nice macro news and it may start pumping. It's a really weird limbo situation. What I was telling friends is that the main issue with this, I mean, just talking about Bitcoin, the main issue with how the market is that we're in a point where you cannot make any decisions. Like, if you were going to sell, the time to get out was like 104, 105K. You wouldn't be buying anywhere around here because, again, this could go to shit again. So I know it's like a really weirdo situation.
I have like a chart, and you guys can react to this, but this is a tweet from January 25th, 2024, so almost 2 years ago. 2015 low to 2017 high took 1,064 days. 2017 high to 2018 low took 364 days. 2018 low to 2021 high took 1,640 days. 1,064 days. 2021 high to 2022 low took 364 days. Anyone want to take a guess how many days it took from the 2022 low to the peak 126K BTC?
I think it hit it. It hit it to the day, or like plus minus one.
plus minus 2. Minus 2 days. Minus 2 days. And if that's actually called the top of the market, there's nothing that can ever be said against the kind of 4-year cyclicality ever again. This is beyond like what I can imagine with, I think people make like statistical fallacies quite often in their head with numbers like these, but this is like kind of beyond what my brain is able to handle in terms of if this can possibly be correct. So I agree with Ricardo, but I wanted to add just these numbers to give it like an element of craziness.
Yeah, I mean, like that the preciseness of the cycle does lead you to think like, well, aliens probably do exist and they probably are here. Like, it does.
And like someone's fucking with us, basically, is the message there.
Yeah, so I think like after this recent drop, I think like until about a week ago, it wasn't clear yet where we were in the market. I think now it's clear. Like the 90-day or maybe going even further, but basically everything is down substantially. Like the big guys are down like, I don't know, like 25, 30-ish%. That's basically like Ethereum and Bitcoin. And then everyone else is down like 50 plus. So, I mean, it certainly fulfills the, like it's a severe enough drop where like a lot of people are badly underwater. One thing I want to bring up is like, I do think like I was skeptical of the cycle repeating in the exact same way in this cycle, I guess. And I think like in some ways I was correct and in some ways I was wrong. So I do think like the cycle has been very different. Like the fact that there's just not been any indiscriminate buying at any point. Like if you were holding certain assets, the bull market never even happened for you. That's quite different. Like this sort of like trickle down effect where like Bitcoin goes up and then like people rotate into like you know, Ethereum and some other things, and then those go up and then people rotate into DeFi, which is what like had happened the last time and in general has happened in most cycles, just didn't happen at all. And my read on that is that it's basically like retail has never been here. It's only institutions, and they're just like not indiscriminate buyers. And there's much more focus on kind of fundamentals, even though one could argue that even some of the big boys are trading at like pretty weird numbers considering their fundamentals. So that one thing that Mika pointed out, like another thing that's kind of different is that there is actual revenue. And I'm not sure if the market is like pricing it correctly this time. Like the fact that we're following that cycle so precisely, even though like the maturity of the underlying things is much better, it kind of leads me to believe that maybe this cyclicality in some sense is wrong. And like we haven't yet picked up on it, because in the past, and I'll stop monologuing in just a sec, but in the past, the problem with all revenue was that it was essentially like completely circular. And so you had like people trading, you know, like you had people trading like exchanges and lending market tokens, which were getting revenue based on using exchange and lending market tokens. And so then once something started dropping, you had this kind of spiral where revenues spiraled with the market tokens going down. And that to some degree is still the case, but much, much less now than it was in the past. Like we have significant amounts of lending market volumes in like fiat essentially, or in stable coins. We do have a lot more real world assets. I think probably still not like huge proportion of kind of the market value, but certainly much bigger than it was in the last cycle. And so you should expect revenues to kind of become less death spirally. And maybe the question for this market is like, how death spirally is it right now? But I do think that as that happens, there's quite likely to be an outcome where actually like revenue multiples compress significantly to like non-reasonable levels because of like this historical cycle. Like what is happening psychologically now is people like, oh shit, the cycle's real. Like, you know, like kind of having the same thing as me, like, oh my God, it's happening again. Like it's never gonna end, blah, blah, blah. And that might cause some quality assets to get depressed to a point which makes very little sense given their like real revenues. In the past, you could like quality assets would get depressed, but you would still need to kind of like speculate on whether they're going to go up. But now it's possible that you actually get a project that like their revenue is essentially unchanged or goes down just a little bit, but then their price compresses 80%, you know, like things like that. And so I think it's like we're going to go into a really interesting bear market in some ways, if it is indeed a bear market.
This hypothesis as well, and it kind of reflects the cyclicality in terms of BTC didn't have that parabolic run, or maybe BTC did okay, but like nothing else did. And then that compression phase you would expect is also kind of less radical than it has been. And then there is, unless crypto kind of dies completely for some reason, like these protocols are growing, and this is an environment where they can continue to grow as well. This isn't like a very adversarial environment for the businesses. So that kind of aligns with this thinking of, okay, let's say we are in another 4-year cycle where the next bottom is 350 days or so away. Well, that's a period during which these businesses can grow, or at least like stay on par with where they are now. But the valuations start to compress to a stage where you're essentially trading at like 3 times earnings or something like that. That can start to be the case for a lot of these protocols. And then it becomes a very, very and TradFi type of situation where, during market blow-ups, like when people are scared to buy, just the earnings multiples like compounding actually takes care of the bear market in some sense at the bottom. And so you may have like this kind of very traditional mechanism that comes in and helps you out. And I think if you're in the right project, I'm going to guess there's going to be a project here somewhere where essentially if you hold for 1.5 years from here, I think you'll be flat on price, but I think you'll double your percentage ownership share of the protocol itself by kind of buyback mechanisms or something like that. And that's a very good situation to be in, and kind of a very chill situation to be in from an investor standpoint, because it does feel like there are winners. It does feel like there are protocols kind of in this situation, and you just kind of have to, you can just be patient and sit on them. And if you're right about the business retaining its kind of volume and moat, like you're going to end up doing really well whenever this kind of turns around. And there's a lot more I can go into there, but that's kind of my first thoughts.
I mean, okay, so for starters, I agree with the real situation with the actual income on projects and some cases platforms cycle. If I may be the one who takes a step away from the astrology and the confusing correlation for causality a bit, we did comment on quite a few episodes back that the crypto is a macro asset. Now, okay, first let's leave aside the bit about all the shit coins that didn't bump because, you know, people were just expecting to have the usual waterfall thing. That's perfectly normal considering how things have changed in the market itself. But then we had commented that crypto is a macro asset now. It's kind of a funny coincidence that macro went to shit in kind of like in time with what would have been the Bitcoin cycle. That definitely makes it and exactly what the hell is going on here kind of situation. But let's not forget that, right? This is not just the crypto market being cyclical. This is the world being in a very particular situation, the US inflation being out of control. Who knows what the fuck is going on in the US government? There are like lots of uncertain situations worldwide, and all of that is depressing prices for everything. This is not just crypto. So it's just funny that it kind of aligned so well. What I'm saying is, I wouldn't, if anybody's listening, I wouldn't like say like, okay, sell everything now and then buy again in 300 days because that's how the cycle works or something. You may want to look a little bit beyond the astrology. That's what I'm saying.
Well, yeah, like I kind of agree with Ricardo in the sense that we're in like a bit of a limbo state where even if the cycle holds, we don't know how deep the bear is. And like the bull wasn't as high as everyone sort of would have expected. And similarly, it's possible that like we like fail to predict how deep we go. And in general, like I try to avoid predicting the bear. Like you're in a bear market when prices have dropped by 80% or whatever, and they've been around and about there for a while. Like that's my
when everybody stops bitching about prices because they have already capitulated, and so you never even hear about how bad things are anymore.
Yeah. And so it is a tricky limbo zone. I think the implications, just to like run through some of this limbo zone in my experience, is that like really hard to raise VC rounds. Because like most investors will just pause deployment essentially until the market stabilizes somewhere. Whether that like ultimately makes sense or not, it comes from this general philosophy of like not catching a falling knife and waiting for it to stabilize. On the public markets, it's kind of the same thing where like it doesn't really make sense to start putting on positions now because it's unlikely that the situation is going to be that different in like 6 months time. And so if you wait 6 months, maybe prices go down, maybe they're about flat, doesn't really matter. Like the likelihood is that they're not going to go up massively. So you kind of like are incentivized to wait. And that puts like the whole market into this like holding pattern that is somewhat tricky to navigate for people, and especially for like projects needing funding and new projects getting started. Like I would say like to get a pre-seed round now, really tricky, because like your investors will be thinking about the payoffs kind of being 3-4 years from now in some ways, and they don't know what that market looks like. On the other hand, in the next few years, I do think like we'll probably see something, maybe not as dramatic, but we'll probably see something like the Solana trade from the last run. Like there are going to be, and probably there's not just one. And like I would argue there's probably going to be more this time. Like last cycle, basically the two trades that had like a pretty nice risk adjusted like return were Solana and Bitcoin. And now I would argue that there's probably going to be a lot more like there's just more institutional usage. Like it's clearly getting much more integrated. It's definitely not going away. But even though all these positive things are true, prices will probably be compressed. So that means there's probably going to be opportunity. And I think a lot of it will be kind of on like the DeFi type layer. Like, did you guys see the new Aave app?
I haven't seen
Yeah.
it. I've read about it, but I haven't tried it.
Yeah, well, I mean, it's a waitlist type thing, so it's hard to try. But I think like that, like we've been in crypto, we've been talking about like kind of vampire attacking TradFi with better interest rates for a long time. But this is like kind of I think like one of the first really like hardcore kind of like very well directed attempts to do that, which is like what if we just go straight to retail and give them 6.5% on all their deposits in a way that feels like a bank account. Sorry.
Plus significant insurance as well. It's insured up to like 1 mil or something.
Insured up to 1 mil, but there was some conversation on Twitter, which the Aave team hadn't yet responded to, which is like, what are the terms of this insurance?
Yeah.
That doesn't matter.
But, yeah, and given like Aave's product, it's not an unreasonable thing that they could provide as well. Like it's not sort of out of the scope of what's possible with like good rates and stuff like that. So I think it's.
But I think like that's like where a lot of the most interesting stuff like right now is going to start happening, which is something that probably will get built up in sort of this bear market and is very uncorrelated with crypto prices. It is basically just like neobanks going after like TradFi, the TradFi bank market share, I guess, by paying out better interest rates. And I think that's
we're kind of getting both, right? Trade Republic and now has a crypto wallet, like proper crypto wallet, not whatever token being hosted thing that Revolut was doing. And then it seems that like projects like Aave and what is it, Avicii that raised on, I think they raised on Metadao, are going after the neobanks themselves. So things are gonna get really lively in that side.
That's where I think also if the current bull market was interesting because like then was the risk adjusted returns and the risk adjusted returns in a way that was there was like these pumps of like meme coin and there was like AI coins for a moment and some like there was a moment where movement went up. There were like a very, very short kind of cycle things and very few things that kind of stuck. But there are also things that kind of re-rated upwards as well as concepts. And I think more of those concepts will probably exist in this type of market, which is it's not super unhealthy. So it kind of gives room for like good projects to even if the price doesn't go up massively, to still like kind of stand out, I would say, relative to the others and kind of be in a position where they put themselves like as the kind of next cycle's leaders in a sense where like the previous one, like Solana, it really got to be this cycle leader because the pain was so hard. But I think it may be the opposite case where, you start to have these standouts where the pain isn't really there or there's a kind of a rotation to them. And that goes well. Like I think Metadao and projects that come out of that is definitely going to be like one area that's going to look really, really good and that isn't going to suffer from cyclicality in a very, very like meaningful way. I mean, it can, but not in the relative sense to what we've seen before. And kind of, yeah, it makes sense to be kind of aware here and awake on those opportunities as well, kind of all the time.
That's something I actually did want to object, not you mentioned it, that Teemu mentioned that we might see like a Solana style plays. I would be surprised if we get something quite like that Solana trade because Solana had a sort of double whammy on 2022, which was the bear market and then getting depressed by association because, oh my God, what is FTX and what are FTX and Alameda going to do, right? And how are they going to dump this thing? So Solana went down significantly more than the market average while nothing changed about the project, right? That is the kind of proofer that you don't see that often.
I mean, I agree with that, and I don't think they're going to look the same. But just to like as an illustration to go back to what we were talking about a moment ago, like I think the markets, like, even though markets are now emphasizing revenue more, I think they're still pricing in a way which, like, the same project, one without revenue, one with revenue might have the same like market cap. And so they'll re-rate around the same until they start, like, the revenue generating projects will probably start essentially like buyback operations, and then that will change. But largely that hasn't been the case yet. Like, the sort of like the past year and a half, a lot of projects started to think about doing that kind of stuff, but like a lot of it isn't happening yet. And so it's not going to look the same. But I do think there's a good chance you'll find like projects which have revenues that are at least in relative terms quite sustainable even in a bear market. But then they're trading at a revenue, like at a price which is the same as some other project which has like almost no revenue. So you'll have these like discrepancies that I think could be quite good trades, but who knows? Like, this could be totally wrong. Like, we'll see. One thing I wanted to touch on though is like to go back to kind of the core question. Why are we in a bear market? Or like, why are our prices down? Like, we broadly think it's a bear market, but why are prices down this much?
I mean, just on crypto and generatively discussed, is easy to say. The first of all, the global uncertainty that has been there for a while hasn't gone away. And from what I recall, the last Fed statement was like, no, inflation is not temporary and is not going away, and we're not just going to start cutting rates right now. And the moment that they said that, the week went to shit, right? Like, structure broke, everything went to hell. It's doesn't seem like that hard, that had a call to point it at that particular event. Now, the question is, what can happen to push it further down, or what could make it go back to a reasonable range? And that's actually the thing that I'm not entirely clear on right now.
It depends a little bit on which part of the market you're talking about, because I think it's quite clear in the kind of DeFi liquid token market is there's just no buyer. There are like literally zero buyers in that market. It's not like the VC market, which still has like investors in it. Like there's no one is going to buy, pick a token X that was launched 2 years ago, trading at 8 times earnings or something. Like there just isn't a buyer for that, and that doesn't exist. Maybe BTC is a little.
Can I say one thing? The other thing that's interesting about this is like there's because of how crypto has been, we also don't have like a mature industry of institutional buyers for liquid assets, which is how TradFi works, right? Like TradFi doesn't really rest on the retail marginal buyer. Like nobody cares if Betty Housewife buys some stock. Like it's all like, these massive ETFs and institutions managing money. There's like some of that in crypto, but like nowhere near the amount that sort of would make sense to have given the total value in the industry. And so basically all these like money managers, like they're already like probably fully allocated as much as they're going to allocate. And that it doesn't necessarily mean there's like not more good assets. There's just not people structured. And it stems from the fact that, like, let's say in the past 8 years, to raise any kind of like liquid vehicle to do this stuff has been like a very contrarian thing in TradFi terms to do. Not only has it been like tricky to get through regulators, but like you go to LPs, like, the Hamilton Lanes and whatnot of the world, and you're like, I want to do like liquid crypto, and they're like, what the fuck are you talking about? And so Like we just haven't had the formation of that. And I think that kind of needs to happen before we start having like well-functioning liquid markets. I would argue that right now, liquid markets are probably going to get priced quite wrong. That may be a good thing or a bad thing for you as a private trader, but simply because like there's not enough people doing it.
Yeah. And there's no discrimination between the assets right now. There's like nothing, no one cares, no one does due diligence. It's not like it's just the dead kind of segment of the market. And it deserves to be dead. And to this, I would say to this point, it kind of deserved to be dead as well. It wasn't like it was such a great deal yet before kind of, I would say, the last half a year or so to actually take a look at these liquid names and invest on them based on fundamentals. But I do think we're now kind of getting to that point. It's very, very, you could tell me the next bull market is kind of one where right now you see this multiple compression where you're buying super low prices, and then the next bull is like the kind of opposite effect where not only do the revenues blow out and they become hugely cyclical, but also the multiples blow out at the same time, and then they become like super overvalued. And it makes sense to go to kind of from one extreme to another, I would say, over the kind of next cycle. And to me, this almost has to happen because like, what's the point of any of this stuff if these businesses aren't growing, you know, and at some point that has to translate to it being a dominant force in the market cycle. And I think that will kind of happen during this next cycle, basically. That's kind of like the bet I have.
Yeah, one interesting thing was, and I'm just curious to get your take. So like we had like the public markets, the public stock markets, like did have kind of a frenzy with crypto stocks. There were not very many. We're basically talking like, I mean, Coinbase experienced, I would argue, the least of it, but then we had like Circle, which was trading at some insane prices and probably still is. We had all the DATs, which were pretty like highly valued, etc. And then that didn't really, like, I would argue that the multiples, kind of counterintuitively, the multiples in crypto, in projects with revenue, they're actually like pretty small compared to most businesses in the world. Like you would assume that crypto revenue multiples would be like crazy because everything is so overpriced and blah blah blah. But actually, they're not. They're, even in the bull market, they were like relatively reasonable. And granted, they probably include a lot of fear about like this death spiral thing I talked about, of like how much of the revenue actually outlasts like prices coming down. But still, like it feels like there's like you would expect revenue multiples to, I think, be a little bit higher on average than they have been.
Yeah, I don't think there is any analysis towards that kind of makes sense of it, besides that the market just hasn't cared. There's no discrimination between the assets. There's just no, and that's why I don't think anyone will care either. And that's why I gave the example of you may double your ownership in the next year and a half in one of these protocols without the price moving at all, because there is no forcing function in the market, and the only real buyer that's going to show up here who has size is the protocol itself. And that obviously will kind of lead to a better market down the line, and these will start to be priced in more sensible ways, these businesses, but assuming they keep growing. But yeah,
Can I make a funny observation? Not that long ago, the crypto market was products that didn't generate any revenue with highly valued utility coins attached to them. And now we're going into a potential future where actually you have products that are generating a lot of revenue with very low valued, not utility coins, but like coins that somehow are linked to the success. That's kind of like one it's quite a positive framing, I guess, for what has happened, where like it's not all fake anymore, essentially. But then this coincides with people stopping caring, which is kind of like an interesting dynamic, right? It's like we made it and there's just no one here. Like nobody cares.
If you had to tell the story of like, it's kind of a beautiful story as well. Like if you had to go into this thing and be like, oh no, it's overvalued. But then there comes this moment where, what is this? Like, I don't know, Drift is trading at 2.5 times earnings. Like with 5 times year over year business growth. Like you would almost expect to find yourself in this kind of position if you continue on this theme of, okay, this is a new market and like people don't understand any of this stuff. And there are these highs and these lows. You would expect to describe the highs the way we've described them, and you would expect to describe the lows the way we're describing them now, in a sense. And that kind of like gives me a lot of confidence that the market is evolving as you would expect in some sense.
I have like a rule of thumb that I've empirically validated over the years, which is that the broader market, in some ways, like the mainstream market, comes 2 cycles later than you think they would come. Like if you're like, okay, like we figured out DeFi 2 cycles ago, surely they've now figured it out. Nah, probably 2 more cycles. Like it's much slower than what it feels like. And in our bubble, all these things start looking very, very obvious because we've already lived through a cycle or 2 where they've been obvious. But then when you go to like a normal person, and I'm not necessarily saying like, you know, a janitor, but like janitors might be on top of these things. But if you go to like a normal financial professional, they probably have no clue what DeFi is or what they should be looking at. They're like trying to figure out like, you know, I've heard about this Cardano thing, like, you know, and so I think like that dynamic is always dangerous for us as like investors because we might overestimate how quickly the market will kind of like update its parameters. But on the flip side is also always kind of an opportunity because the market will like misprice things for longer than you would assume, creating opportunities. So it's an interesting dynamic.
And honestly, we might be getting to the point that we need to get, which is where the market doesn't need to give a shit about DeFi. They just need to know, I get a higher return here, and these are the conditions for insurance, and that's it. That's what they should actually be caring. That's what they need to care about. I remember the first time that I spoke at the Ethereum Community Conference 2019, this thing is going to be almost 7 years ago, was precisely around the topic of like, what the fuck are you expecting people to remember 12 words? Like, what is all this things what are all these things you expect people to learn before they even start using your shit, right? And I'm glad that we're finally starting to move a little bit away from that. So ideally, people will never have to guess that, right? Like at most, if you're a trader, you're going to have to recognize the difference between, I don't know, Donkey Exchange and Cube, where the funds are actually secure on chain, but you need to know anything about that. You just need to know that there's a live, publicly auditable fund status continually down to your individual account, right? That's the only thing that you need to know. If we keep expecting the market, the normies, let's say the market at large, to figure out DeFi, we're screwed. Like people don't have that sort of mental bandwidth, period.
You would see, like, if you look at the past few years of these apps, you're kind of heading in the right direction. It's how many people know Polymarket is on Polygon. Probably be useful for the app and it's like kind of responsiveness if it wasn't, but it's not the worst thing in the world, you know, like you can make do make do with what it is, and people just log in with their, use Privy and log in with Google, and you have 2FA around that, and it's starting to get like pretty clean. Like it's not clean, but it is like 70% clean, like and a lot of the neo.
Well, and also like it is money, right? Like we shouldn't expect things where you're handling money to be like way better UX than what the traditional banking system is, which is like, I would argue, like, yes, we want to make it better, but it does need to be secure. And so it can't just be like, go to website, click button, money moves,
Sure. Yeah. I mean, you took it back. So yeah, I would say that we can make it better. Again, just the cube approach where everything is central except where you hold the user's funds, like that I think is significantly better UX than you're going to get in most exchanges purely from a security standpoint. But yeah.
Can I ask you guys another kind of like market or relative question? It seems to me like there's certainly been like a small number of things that have broken into the mainstream. Polymarket being one of them, Bitcoin being another. So do you think, like, are there any other L1s besides Bitcoin which have actually broken into the mainstream? Either via products that are built on top of them. Like you could argue that Polygon, it didn't break out into the mainstream, but the fact that Polymarket is on Polygon does, like, there's some, like, they benefit from that. And so, like, has that happened really anywhere else?
Do you consider the fact that there were all these meme coins, including Trump's and Melania's launching on Solana, not be a layer one breaking into the mainstream? I mean, it doesn't get more mainstream than the president of the United States launching a coin on your chain.
That's true. So yes, it did push it into the mainstream, but I'm not sure it did Solana any favors, honestly.
Neither is Polymarket doing Polygon any favors. So same difference.
I think it is. I think in a different way it is. Polymarket is like, has sort of like real sustainable utility, while meme coins don't. And those meme coins are dead already.
Sure. What I'm saying is that, okay, maybe we might be thinking about this differently. And we did discuss a couple episodes back that I do think the preponderance of meme coins on Solana did actual damage to the platform's reputation. But what I'm saying is that it is not Polymarket running on Polygon doesn't mean that people are more aware of Polygon. In the same way that meme coins being on Solana doesn't mean that people are more aware of Solana. It just means that the platform is actually getting mainstream usage.
Yeah. So okay, we could we can put Solana in that bucket for that. Was there anything in Ethereum that had that? Like maybe base, but I couldn't tell you like what on base exactly.
And that wouldn't be a layer one breaking into a mainstream. That would be a layer two breaking into a mainstream that happens to use Ethereum as its thing of record. It's
yeah. But I was thinking about it in terms of like there is a lot of stuff happening on base, a lot of payments volume going through base. But yeah, it's not really the same thing.
Like if you take Bitcoin as one, you take prediction markets as one, and you can sort of take stable coins as one, and then the stable coins, they're kind of base and Solana. They're kind of like, they're not really A+ citizens in that game still. They're kind of like the B+ type of things where it's not really about that. So you don't have that like driver that's separate from the platform itself. I do think
don't care.
Yeah, I do think the next one that's going to happen, and it's quite obvious, is the perpetual swap and the popularization of the perpetual swap amongst retail. And to win that game, for whoever wins it, Hyperliquid, whatever, L2, L3 situation, you have Solana, whatever. That's going to be really important because if you look at the market size for that from all the crypto use cases, I think derivatives is going to be the biggest market, right? So, and the most valuable market. So when that happens, you kind of want to win that one.
I have a question regarding perps that let me just put it out and then you guys can respond. So like traditionally perps in crypto have always been like retail driven. But in some ways, if we look at the broader crypto market, it feels like retail was like a bootloader for institutional use. And I had this like intuition that derivatives of any kind ultimately will primarily be for institutional use and not for retail. Would you kind of like agree with that? And if yes, then like what does that imply for the perp market? Because I do agree that most on-chain perp stuff is designed for retail. There's like more institutionally focused things off-chain, but
yeah, I generally agree. In fact, I wanted to object when Mika was bringing out this example that I wouldn't think of perps as something that's for mainstream. I agree it's going to be a massive market to win, but it's a massive market for traders, for people hedging, both for institutions hedging. It's not retail in the same way that whatever is going on base or that poly market. So it's not mainstream in the same way that those are mainstream.
Okay, let's define mainstream maybe, because so there's like kind of consumer mainstream, which is often how mainstream is interpreted. I think we need to extend that a little bit to include like if TradFi adopts it kind of thing. Because not everything is a consumer product and like, you know, like Oracle isn't fair. Mainstream, but like in some ways, I think you should think of Oracle as being quite mainstream.
Okay, so then what we would define as mainstream is something that a traditionally non-crypto institution or not even crypto adjacent institution would do. So if you are a fund that's holding an asset, if you're a crypto fund that's holding an asset and you use a perp to hedge, then that's not mainstream. If you are BlackRock and are using perps, then that's mainstream. Okay, that's fair.
Yeah, I think that makes sense because it's sort of like things with like maybe mainstream isn't the right word, but like what I kind of mean is things with real large use cases outside of the crypto market itself.
Maybe to answer the question, I think the perps markets will look a lot more filled with structured products. And I think you see the kind of early days of this right now with like structured products like Athena around funding rate arbitrage. Eventually you'll have a lot more stuff around fixed rate, kind of specific expiry dates, option type of setups. You'll have the funding rate products will kind of get a lot more complicated. So I think it'll be like the perp is the kind of underlying instrument, and then the number of structured products kind of grows on that to be. This is, I think, the kind of most exciting part of crypto eventually, like how complicated those products can get and how interesting they can get relative to kind of what's been done before in financial markets. So that's kind of how I view that part of the market going. But I do think the perp itself is basically the optimal structure to host all kinds of different like derivatives on top.
One really kind of interesting aspect of the perp market or like perp market products is that they're completely self-isolated. Like the only thing they really need is an oracle. And which means that like they're in some ways like not tied to any platform. Like there's no necessity, there's no network effect beyond liquidity for that. Like the perp market itself has like some kind of network effect potentially, but it doesn't actually like it's not tied to the ecosystem it's in. It could be like we saw DYDX just jump from StarkX to Cosmos and like that kind of dynamic. And which I think is interesting because it kind of raises the question of like does it like traditionally the way that you would have thought about this is like, okay, invest in the L1, which like best suits kind of having a perp dex. But if the assumption is actually like there's just going to be new perp dexes every time there's a new better platform, they might even be their own platforms like Hyperliquid, etc. Like is it investable is kind of what I'm asking, or is it something which would be like highly competitive from here on out?
I don't expect it's going to be highly competitive from here on out. I also think that having liquidity can be a massive moat. Liquidity doesn't just necessarily want to move away, particularly if your thing is battle tested and that other thing is not. But for what it's worth, I can see a scenario where perps are not standalone. For instance, if you were borrowing dollars from an Aave equivalent, and you could deposit a bundle of not only, say, Ether, long ETH, and an ETH short perp that's generating, then this could likely be a more stable, sustainable way to support your USD loan. Effectively, you're kind of like packaging together your own delta neutral thing against the loan. So that's a scenario where I can see that perps are not fully or can be not fully independent from the ecosystem at large, where they could be bundled. It's also a little bit of a more exotic scenario, or people just doing perps, then yeah, it could be just standalone.
I mean, now that I was saying that, I think the same argument could be made for Polymarket. Like in some ways, it's a risk to Polygon that Polymarket doesn't really rely on Polygon for anything. Like it could be on any other platform and work the same way.
Yeah,
I mean, not in some ways. It's a risk.
Yeah, if you reflected to, I do expect that to happen and that risk to be realized Polygon at some point down the line. I don't know what that is, but I think it's essentially 100% certainty. And it's a bit different from the spot market, right? Because spot markets actually rely on somewhat the assets being on the chain. And you're right, derivatives don't. And this makes it very much to me, this is like a pro Hyperliquid-ish view, which I think is true, maybe not for them specifically, but for someone in that market, which is, I think you are the kingmaker of everything if you are the number one perp dex. And you,
well, but with number one perp dex, you basically just want to be on your own infrastructure. Like it doesn't make sense for you to be on someone else's infrastructure.
Yes, or it doesn't make sense for you to pay fees to someone else if they could be paid to you. Yeah. That's 100% true.
I don't know what the conclusion here is, but I think there's like something interesting here where like maybe it's just not it's not just a perp dex thing. It's also like Polymarket and some other ones. Like there are instances of products where traditionally I would have felt quite comfortable investing in the platform that they're on, but now I would actually, like a lot of these breakthrough products are products that could easily move and actually have a massive financial incentive to move onto their own infrastructure at some point. And so you kind of want to invest in the product and not the infrastructure, because the infrastructure is somewhat of a commodity. Like in general, I would argue that most of the reason that the banks and everyone have come now, and it's not like all going to shit immediately, is because like the L1 stuff has kind of been invented. Like it's mostly just an optimization exercise now. They don't need to come up with some like new crazy thing. Like just take some fucking Comet BFT off the shelf, it'll be fine. And it seems so like I think L1s are kind of getting commoditized, is I guess what I'm saying.
It also seems that this sort of category of product is relatively easy to narrow down, right? If it's something where you cannot immediately come up with 2 or 3 cases where this would benefit from composability, then this is a standalone product. Forget about the base layer, right? Like for instance, the case of Hyperliquid, where everything is settled in a base in a base stable coin, something like that. You don't really need composability by and large. drift where your collateral can be a multitude of tokens, then yes, you do want composability because you may not want to be able to swap inside drift, but you may want to swap in Jupiter or anywhere else. So that's where I would draw the line.
I think this is a reasonable point, which is like Solana can do well on as a home for the perp market. I don't think that makes Solana the most investable out of that, but it doesn't mean Solana is like bad infrastructure for that perp market to use and that you won't get benefits out of it. It just means that you'll pay appropriate amount for that service and you will capture yourself a majority of the value. So like even I wouldn't invest in Solana based on that thesis, but it doesn't mean that Solana can't help that perp DEX to really achieve something like really big. It's just that you pay the appropriate amount that you pay for that service, right? And I think that's the kind of best outcome that Solana can have, which makes me think that you should bet on the perp DEX that you think is going to win and kind of maximize that infrastructure. If you think there is additional benefits to composability, which there are, like Ricardo mentioned, in terms of like collateral type and things like that. And just like the kind of products you can build and the ease of which you can build them is easier on Drift and integrating with Drift than it is like on a separate new chain that's only about perps. So Solana needs to make the service offering very competitive to be able to run a perp market, so that perps will want to use it. But like I don't think like it's necessarily kind of either or in a sense. I think you can get a lot of benefits out of Solana to build your perp DEX.
And composability doesn't even need to be like, does this uses tokens or the projects, but can this benefit from other existing projects? Like for instance, you could have in Solana a purely USDC settled perp DEX that arguably could be working on its own chain and whatnot, but that benefits from the fact that let's assume 2 years on the future, that this perp DEX benefit from the fact that GTOBAM exists and that there's this whole marketplace for scheduling how orders come in and how they get handled. Right, like just that could be an example of composability, even though the operation of the DEX itself is by and large self-contained. So that kind of scenarios, whereas, in Hyperliquid or whatever, Hyperliquid successor, you're relying on them to schedule things in a way that's convenient to you. So those kind of scenarios are a scenario where I think like a base layer can have an advantage.
Yeah, and I guess like the traditional playbook, like when computing infrastructure starts becoming a commodity, then you just play the subsidizing game, right? Like you essentially try to get people to build on your thing via like outpricing, like them doing it themselves, which is kind of what Solana is doing. And then hopefully by the end, like you grow this big thing on your platform, and then it's like hard for them to move. And if your pricing is reasonable and your performance is fantastic, then maybe there's not a reason to ever move. Which is like it's more like an AWS way of thinking about things than it is an Ethereum way of thinking about things. Like the problem with Ethereum is that it's never playing the competitive pricing game, right? Like it's the opposite. You pay
it's a little bit different. The way that AWS would be closer to this is if you price Solana for them to come in, then you make it really easy for them to hook into Solana specific functionality like PAM. And now you just can move away without losing that functionality. That's kind of like the AWS preferred.
You can move between these things, but I'm talking about like you get a bunch of credits. That's why you don't build your own. Like you want to have the capacity to scale to a certain point, and you don't want to deal with like the DevOps and
that's not the only thing
they make that you necessarily might not be able to make yourself. There's all kinds of market structure things that can improve. But what it does say like about the market caps is that Solana 100 bill, if you take the AWS example, and I think that's kind of how it's going to work, like Solana being 100 bill and its top perp DEX is being like 400 mil, doesn't make any sense. Like 200x difference on that, the delta is ridiculous. One should go up, one should go down. They need to find like a completely different equilibrium point that they are at right now. If you're an investor who believes in all and any of these businesses, you should think about it as a great opportunity. Like, it could even be a future where Solana goes down 50%, but you just made a huge amount of money betting on something else. Because if the market gets sensible on what exactly, like Solana's a 100 billion business almost, like that implies some growth, that implies making some money. But like, I think you'll have a day where the perp dex on Solana is more valuable than Solana itself. And that's like the biggest opportunity. It's like, yeah.
And for what it's worth, I'm not just nitpicking here because I cut my teeth on Web2 for quite a bit and I had to go through all these freaking platforms. But arguably, some aspects of AWS are easy to migrate. If you're just using EC2 or just using S3, like, yeah, sure, that's the same as starting a VPS anywhere, or there are like tons of S3 compatible services. But that's not what AWS really likes. What AWS really likes is when you come in and start integrating AIM, or you use DynamoDB, which is their very specific thing. Once you start using those things, now you're married to the platform. And if you, arguably, if you're a layer one that wants to hold these projects beyond the point in which they would want to stop paying you and to just move on to their own layer one, what you want is being able to provide this sort of thing, like the things that they get easily by default on your platform that they're just not going to get anywhere else, right? If this is going to be Tito Bamo, who knows?
But just making a Solana like system means that you're married to their like that code base, right? Like it's not going to work anywhere else. Like there's it's not the same, but I'm just saying like there's similarities.
You could fork Solana and run your own version of Solana if you have that much volume, right? But you're not going to have the ecosystem around BAM.
My guess is that the network effects in L1s are actually much larger than people think. And this hypothesis comes from the fact that ETH is still the dominant TVL kind of place and the dominant by market value, despite there being like such big improvements over it and the valuation not making any sense. I do think there's like something to be said for how do you even get a wallet to integrate? Like, what's the block explorer? Like, what is the RPC? Like, just even like basic kind of stuff. Ultimately, like you can be at a scale where you can fork a lot of those things, but I do get, my guess is there's going to be a million little things around these platforms that is just so useful. Like even with Hyperliquid, it's like the bridging experience really sucks and the support really sucks from exchanges. Like what exchange is going to support your chain, you know, like all that kind of stuff you don't have to worry about. And I don't think like you're paying excessive rent essentially to Solana, unless it's like structured fundamentally incorrectly where it doesn't fit your cost structure for what you're building.
Yeah. Okay. I think we should call it there. We have not really come to any conclusions besides that the market is in limbo and there might be interesting things to invest in the coming years, but probably not in the next few months. So with that, yes, Ricardo, do you have a final quote?
No, we can leave it at that.
Spicy line.
Yeah, again, guys, this is macro. Who the hell knows what this is going to be? Like maybe Trump panics because he is mentioned over and over. There's like photos of him buggering kids on the Epstein files. And then in a wild to distract people from that, like puts a gun to Powell's head and like rates go to zero. Who the hell knows? The point is, this is not like basically nobody knows where things are right now. Nobody knows what the hell is going to happen because Marco's in control. So good luck, have fun, don't die, I guess.
Fantastic. We managed to bring the Epstein files into this episode. So now we
of course that's we need the clickbait, man.
Yeah. All right. Well, thank you everyone. See you next time. Be safe. Bye-bye.